Hi traders, Niall here from learntotradethemarket.com. Welcome to today's price action tutorial video. Today we're touching on a simple subject using an anchor chart. Now the anchor chart is simply the highest time frame that we'll look at and then work down from there to gauge an opinion or make judgment on the market's short-term direction. Now on the weekly euro-dollar chart we have some tailing action going on the candles. Now, if you see this 134.45 level here, you'll see it's been tested for 3 weeks straight. Now, keep in mind, each candle here is a weekly time frame. The fact that we've tested that level, 134.45, 3 consecutive weeks, we've got these nice tails on the candles, long rejection signals going on. We've now moved up and taken out the 2-week high. We're sitting right there at the 3-week high, 137.90. In fact, on Friday we did break that level, but have just eased off onto Friday's close. If on Monday we can charge through this high at 137.90, wouldn't surprise me to see a quick move up to 140.50, 60 area. Now, if I just explain how I look at the market for a second here. Regardless of the trend, I think it's important on a weekend or a Saturday or Sunday, you check out the weekly chart on all the major pairs. For instance, this pair here was uptrending nicely up in towards 150, 120. Now the weekly chart threw in a very strong sell signal right here. Now if you hadn't looked at the weekly chart, the daily chart really wasn't showing you anything at all. You would just assume the market was still in a nice uptrend. Now I certainly do promote trading with the short-term momentum and with the current trend. However, price action is a wonderful thing because it can identify turning points in the market. Now, if you look at this chart, it looks inverse to one another at the moment. You can see the top here, those two tails right here were very strong termination signals, and again, this area here, these 3 signals look very similar, don't they? The tailing on these candles signals something very important, and again, right here, the weekly chart showing a very strong rejection, a nice upper tail on the candle. This stuff certainly does work to show you where the market could potentially go on a weekly basis. Now that we've got some bullish signals here on the euro-dollar weekly chart, we can go into the daily chart and you can see a very strong confluence of support at 134.45, and the confluent factors are these strong rejections, pin bar reversal signals. In fact, we had a double pin bar right here. Now we've got 4 bullish reversals off 134.45 on the daily. Now that matches up with those 3 tail-like candles on the weekly chart. Just to refresh your memory, have a look at that weekly chart again. I'll zoom in for you. You can see very strong support there and tailing action. If we go back to the daily, I want to point out another factor that's occurred in this market to take note of. If you see the market found that support, then rallied into around about 137.12. That was important. That short-term high was important because if it wasn't reclaimed, and I'll get to why it's important in a moment, but I guess we have to take note of that because it's the first high after the first bottom. We mark with a level. The market then pulled back, and this is why it's important. We've now cracked that high and closed above it. That is a 1, 2, 3 trend reversal. It's a very simple setup. I'm not claiming fame to that. That's been invented long ago in the markets. But a simple, first higher high and lower low does change the trend. And you'll notice it was a nice downtrending market with lower lows and lower highs all through this period right here. Now it's changed now. We've got that first high and now the second high. That's why it's very important. Now, combining all this support here at 134.45, combining the rejection on the daily chart, and again, go back to that weekly, combining that tailing action, that rejection action on the weekly, combining that with the current breakout that's occurred on Friday, it'd be logical to assume this market is now in a bullish mindset or a bullish bias. If you can mark your levels, you would probably look for 138.35, that's this area through here, and there is another level which is very important here at 140.50 or 140.60 area. That's that peak right here. You can see a very strong reversal candle there. That is an important target point in terms of where this market could potentially get to. Now I must strictly ask that traders do not act on this advice and trade in their own account. This is education only, and I want you to learn from it. Pay attention to what happens from here. I could be dead wrong, as I always put in my videos, a very strong disclaimer. This is education. I'm trying to help you guys learn what's going on in the market, so please do me a favor and do not trade on this information. If you'd like to take the next step and learn a lot more about what I do, you can check out my advanced price action trading course, members, community, and daily commentary on the website www.learntotradethemarket.com. If you're already on the website, just above you you'll see a Niles Trading Course tab. You can check that out for more details on that product. Okay, that's all for today's video. Hope you enjoyed it. If you've got any questions, email me. I'll see you in the next one. Take care. Good trading.